Let's talk about another possible deal in the healthcare space right now. Drug distributor AmerisourceBergen, they're on the bottom of your screen, up 9% today on word they're in talks to merge with Walgreens Pharmacy. It's just the latest consolidation news in the turbulent healthcare space, and Walgreens is fractionally lower right now.
Joining us right now to talk about it, Bill Smead, of course, CEO, CIO at Smead Capital Management and manager of the Smead Value Fund. Bill, welcome back. And I know you're adding to positions in AmerisourceBergen right now on this, but I'm fascinated by the whole big picture of what's going on in healthcare with all these mergers with Aetna and CVS, this odd alignment now with Jeff Bezos and the other two guys. JP Morgan and all those, and Warren Buffett. And now this one. You see opportunity here, obviously, right?
Well, there's been a pretty good pattern since the Whole Foods announcement when they scared everybody out of grocery, pharmacy, retail, et cetera. The stocks that got spooked by that have been outperformers to the rest of the S&P, even though the S&P's up nicely during that time period. And this appears to be another one of these episodes. Either Jeff Bezos is Dr. Evil or he's Richard Simmons. And what I mean by that is either he's cutting your throat like he did to Macy's and to Barnes & Noble, or he's getting everyone in shape the way seems like Walmart and Target and Kroger and now Walgreens are all getting in shape because of what he's doing.
Bill, I first of all love your analogies. Never fail to disappoint. So
still working on Richard Simmons.
I mean, but we're talking about major changes. So when you have CVS and Aetna getting together, when you have Walgreens maybe deepening its relationship with AmerisourceBergen, I mean, these are big bets to be making. Do you think these companies are getting themselves into the right shape by pursuing these deals?
Yeah, the first thing to understand is the profit, after-tax profit margin at AmerisourceBergen is tiny. So, always the old adage in the other businesses for Jeff Bezos was, your profit margin is my opportunity. So this whole idea that doing the things that Buffett and Diamond and Bezos talked about are going to have some huge impact on the cost of healthcare, in our opinion, is fairly ridiculous. Willie Sutton robbed banks because that's where the money was. The money in the healthcare system.
It's not just about that tie-up. Most of the time, people are just concerned about Amazon being the one to give drugs to people, without the traditional channels. So, if that's the case, is that much more an existential threat for these companies?
Well, no. Everyone thinks that everything in every industry that Amazon takes a look at, that it's an existential threat because they don't make a profit in most of the things they do in the first 5 to 10 years they're in an industry.
Exactly.
So it's a profit-forming torpedo. They sit there and throw out nuclear bombs at FedEx and at Walgreens and at Kroger and these people. And Scott Galloway, the guy from NYU, explains that that's way more power than a company's supposed to have in the capitalist system. So if you're Walgreens... Go ahead.
I was just going to say, in order for there to be some sort of price discipline in that industry, somebody has to start losing money to gain market share to enforce more price discipline. And I think you've hit on it there. Don't you think that that's in part what Jeff Bezos has in mind? He has shown that he's willing to lose money to gain market share to bring his competitors down, right?
And that would be true if what he's doing was going at the largest expenses in healthcare. And the largest expenses in healthcare are almost exclusively the last 5 years of your life, and it's mostly people over the age of 70. Willie Sutton robbed banks. Why? Because that's where the money was. The healthcare system is way overloaded on hospital visits the last 2 years of your life. And so this idea that you're going to pool 27-year-old software engineers with 45-year-old Gen X bankers at JP Morgan and suddenly have a reduction in healthcare costs, or that you're going to horn in on the drug distribution business that runs very small margins, that's not where the money is.
Look, that's fair enough, but Amazon has made some inroads. We've reported on this into doing, looking at pharmaceutical licenses in different states. So it's not like there's nothing there. And my only point on that would be, maybe it's good for the consumer you know, this is also a company that's kind of focused on that. It's important to them. Hey, if you're a Prime member, maybe you could get your drugs delivered too. We'll make it cheaper and easier for you. You know what? If they're a nuclear bomb, pardon the phrase, but if they're going in there and damaging the competitive advantage of a lot of these established companies, maybe that's good. Maybe I like what Walmart has to do in response. Maybe what Kroger's had to do is great.
Who owns drugstore.com?
Walmart, Amazon does now.
No, Walgreens does, and it's been shut down. Amazon keeps telling people that they're going to do something successfully that they've tried constantly for the last 20 years. Oh, we're going to make money delivering groceries. Well, show me the list of successful people in there. Charlie Munger and Warren Buffett wouldn't buy into the grocery delivery business. You see what I'm saying? See, the problem is the fantasy is way worse than the reality. And what Stefano, that runs Walgreens, doing is just saying, look, what we're going to do is shore our business up even more. We are going to have more power and more control in our part of the business so that you can't come in and ruin me. They're basically doing a Nordstrom strategy versus a JCPenney or a Macy's strategy.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.